Insurance doesn't have to be a negative thing that people don't like to deal with. It can actually add a lot of sparkle to something that otherwise would contain a risk. The technology is out there for that, and therefore, why not go for it? AI-driven tools are there to basically save time. And the question is simply, are you a first mover or are you a follower? So I find nowadays, when you talk to a chatbot, they can actually solve your problems. Sometimes technologically requires a little bit more than just adding something to a consumer journey. You need some dynamic pricing capabilities and things like that.
Hello, everyone, and welcome to the Insurance Distribution Podcast. I have a great episode today with Eric Schuh, a founding member and COO at Alpine Re. Hey, Eric, how are you? Nice to meet you.
Hey, Martin. I'm very well. I hope so are you. Glad to be here.
Great. So that we start diving into the topic, would you like to introduce yourself and what you currently do and what's your relationship with insurance distribution in particular?
Yeah, so I'm doing exactly how you introduced me. I'm a COO of a new startup reinsurance company. We're building the company. My particular role is to ensure that this is happening, meaning from technological build processes and basically keeping everything together from accounting to all the way to distribution topics. And before that, I've been in the reinsurance and insurance industry for quite some time, worked at Insurtechs, but also at large reinsurers, and started my career many moons ago as an equity analyst for insurance stocks. So I think it's fair to say that I spent most of my career in the insurance industry, some in the financial services industry, and in Europe and also abroad, like in the Anglo-Saxon world or in Asia and China.
We're seeing a growing number of Insurtech startups coming up, especially now with the wave of AI, etc. But it's not that very common to see a startup for the reinsurance part of the equation. How does building one of these work today? Is it as fast growth as you can expect on Insurtech, or it's more around, building the product and getting into the right partnerships before driving exponential growth?
Well, I mean, reinsurance is a cyclical industry, so there's swings in the supply and demand, and it's not uncommon for reinsurance companies to be started up. It goes in waves, like every 10 years or so, there's a new wave that are then called the class of 2025 would be this year's. So we're in the tradition of that happening. Having said that, it's also a reason why it's rare. It's a very capital intensive industry. Therefore, starting a new reinsurance company requires a lot of capital. It has its own difficulties to do that. It's a lot of work, like any other startup is as well. But the mechanics are a little bit more B2B, I guess, in some ways, and it doesn't happen, like I said, every year. It's a rare event, but it's fun.
I understand. And you had the background in Swiss Re, you've been through Element, you're now in Alpine. What would you say are kind of the biggest differences in distribution strategy when it comes to large incumbents, insurers, an Insurtech or a startup reinsurer right now?
Well, in that order, if you think of insurance, like large-scale insurance, maybe as a caveat, it depends a little bit whether it's P&C or life and health, can be quite distinct, or if it's like a broker market insurer or a direct insurer, as you're well aware of, right? But for the large incumbent insurers, I think it's fair to say that scale does matter, and operational efficiency and distribution power are key elements to success. Of course, you also need to offer a certain product portfolio and so on. But the rise of aggregators and, I guess, intermediated distribution is a reality. So therefore, while it's always been true that insurance is an IT-heavy business, that was also true 20 years ago and 25 years ago. I think particularly now it becomes a deciding factor whether you're able to harness the power of these solutions, or whether the complexity of today's data volumes and competitive dynamics cause problems for you. So the other thing, if you want to grow in insurance, it's expensive, right? While you're growing, you create new business strain, solvency strain, right? Therefore, it costs money to grow, not only for the distribution that you have to pay, but also for the capital that you need to hold. Therefore, it helps when you're a large insurer if you have a back book that actually can finance the new business growth. So I think these are often reasonably important topics for large incumbent insurers, right? Aside from, of course, branding and cross-selling and these topics, which I guess used to be add-ons, but nowadays are table stakes. When it comes to maybe an Insurtech, The flip side of that is often that insurtechs have to pay both the distribution and the growth and the salaries if they're not in break-even territory yet with the same amount of funds. And the money is only there once. That is a challenge, right? Because you need to, of course, show to your regulator that you financed for growth and all that. That is often a disadvantage versus the large players. I guess an advantage is that you also have no legacy. Therefore, you can build data models from scratch, cleaner. You can grow faster, particularly in relative terms. You can maybe focus on certain areas that are profitable but too small for large companies. And then also, I think it's fair to say that it's probably also not attracting the same people. Maybe there is a type of insurance person who wants to be in that kind of environment, like an insurtech environment versus a large company. And that can be also mutually quite beneficial. And then finally, I guess for reinsurance, it's a bit different. Like I mentioned, it's a capital intensive industry. Often, basically, one of your counterparties at your seat and that the insurance company who's working with you can be the security committee rather than anyone else. So it matters a lot whether you're going to be around to pay when claims arise, and they can come many, many years later in the case of long tail reinsurance lines like casualty. So a lot has to do with that. Also, I think unlike primary insurance, reinsurance is a syndicated market typically, meaning that it's more than one reinsurer on the same ticket, which has advantages for startup reinsurers like us, because you can actually join a deal with a 2% share and it's not so painful for everyone else. It might be great for the broker to actually have another name on that panel. On the contrary, there's also, of course, very well-established companies who have 150 years of history and cornerstone reinsurers for their clients for institutional aeons and decades and centuries. So therefore, this is I guess, the balance. So you tend to be a following market at the beginning as a reinsurer. You don't lead the business, you just join in inverted commas.
No, that is amazing. Like a brief understanding of the different players and what is kind of the challenges and opportunities they have on distribution. Wanted to dive deeper into reinsurance, especially given that you are now building Alpine Re. Typically, as you just mentioned, reinsurance work in the background for incumbents or insurtechs to be able to develop these new products, especially at growing and developing risks that we are having worldwide. First off, what is kind of the role of Alpine right now that you would like to have in this new wave that you're mentioning of reinsurers? And how do you see that you are able to create new type of products or new distribution models for either incumbents or insurtechs via Alpine, or well, as a general, as reinsurers?
Yeah, so I think the role for Alpine is we need to get started and launch and establish ourselves in the market. I think it's probably even more to the point to speak about the role of reinsurance and distribution a little bit in more general terms, which actually, again, differs quite distinctly between P&C and life and health. So while I would say in life and health, the reinsurance industry has always worked hand in hand with the primary insurance industry in launching new products, financing new products. Sometimes, it's costly to launch a new product, and it helps if you can share that burden with a reinsurer and then share the sales as well, basically through a quota share. So that has always been the case in life and health. It used to be decades ago also more the case in P&C, but then the P&C industry became a little bit more, with the rise of natural catastrophes and all that, focused on that type of business just directionally. So it became a little bit less common that a reinsurer would do a motor tariff together with a primary insurance company, for example, right? However, I think that this has actually changed a little bit again in recent years, and it has become more common again that reinsurers get involved into product development and solution provision to primary insurance companies, also on the P&C side. And that can be either through tools like underwriting tools or entire placement systems, but also through services like data analytics and certain other features. In motor, for example, telematics was a big field when it comes to that. Let's not forget the whole MGA market, which I think reinsurers and MGAs is a bit of a long story between the two of them, but MGAs are not going anywhere, right? They're a reality, and there's actually been quite some growth. And the history of reinsurers working with MGAs and just, in inverted commas, a fronter in between, providing the paper as the primary insurer, is also a long one. Starting from product development all the way to basically being a vehicle for placing these products. I mean, I guess what is often forgotten is that in order for an insurance company to launch a new product, that tends to be one of the biggest risks for that insurance company, right? Because you don't have perfect data. It's a new product by definition. Therefore, you don't know exactly how it's going to play out in the market. Is it going to sell? Did you get the tariff right? Now, it helps a lot if you have a reinsurance relationship with a partner who is willing to actually share that journey with you and is allowing you to actually launch innovative products and new products in general in new markets maybe quickly. And it makes a difference, I guess, whether things is in the terms of weeks or whether things are can be handled over phone calls and there's trust, or whether it requires month-long processes to get anything started. And so therefore I think there's a lot of also technical and business exchange between reinsurers and insurers other than just the placement of the reinsurance business.
Awesome. So let's dive into the technology advancements. I would like to especially highlight two of these. And let's dive into the first one. I would like you to play this game, which is game changer or hype or in between, which in this case, let's start with embedded insurance. Would you say it's a game changer for distribution? Would you say it's a bit of a hype wave that we're seeing? What is your position there?
I'm a fan, and I've always been, right? I've been quite outspoken on the potential of embedded insurance. Is embedded insurance going to be everything? No. I mean, I'm not in the camp of people who say insurance is boring, nobody likes insurance, and therefore please make it go away. I wouldn't agree to that, because there are certain types of insurance which you should actually spend quality time on and dedicate your time on. For example, life insurance, right? If you have a house and children and the family and all that, maybe it's a good idea to think about that, right? And that doesn't have to be embedded into something else. It's worth the attention because it's pure play risk management, right? But then there's many other fields where, especially nowadays, consumer journeys or customer journeys become very sophisticated. Why would you not embed the insurance solution into a car sales of a new and a used car, by the way, right? It doesn't have to be a new car only. That seems like a logical thing to do, right? Or like a travel insurance when you're booking an expensive travel. So I think there's a lot of good applications for embedded insurance. Bank assurance, I guess, is one of the oldest forms of embedded insurance. There's been affinity business forever, right? But that works, right? Where it makes sense. Obviously, it makes sense where there's emotion in play and you can basically piggyback on that. Where branding is in play, sometimes the insurance component of the embedded insurance can make the original product more valuable, right? And so therefore add to it. So sometimes I feel it's actually the contrary. Insurance doesn't have to be a negative thing that people don't like to deal with. It can actually add a lot of sparkle to something that otherwise would contain a risk. And if you do it well, sometimes technologically requires a little bit more than just adding something to a consumer journey. You need some dynamic pricing capabilities and things like that. The technology is out there for that. And therefore, why not go for it? I would say it's maybe a quarter, a third of the market that can go in that direction, but that's a reasonably big part of the market, and especially since it comes with a lot of potential for synergies, right? Where you don't have to buy the attention of people because they're already having attention on something that they want and all that. You can probably also cover risks that would normally not be able to be covered so easily by a direct insurance approach. For example, if you buy a kitchen warrant, is it likely you're going to buy that outside of the furniture shop where you were buying the kitchen? Not so sure, right? But when you're there, it might actually make a lot of sense to do that. I mean, can speak out of personal experience. If you replace an induction hob, it'll cost you 3,000 Swiss francs. That is expensive, and we just paid a little bit less than that, but that could have been the insurer actually helping with this very unlikely case that happened to me personally.
And in this case, and connecting with the last question that we were debating on the role of reinsurance within distribution, if embedded insurance grows at the expected rate and it becomes, well, 1/4, 1/3, as you were mentioning in the next 10 years, reinsurance will be playing an even more important role because their flexibility leads to even harder, very, very specific risks that maybe we're not covering that much will start to get covered, right? Because of that last mile journey that the insurance will be as an added value, as you mentioned. So it's interesting to see, well, new players in the reinsurance space, which eventually affect the kind of products that we are able to consume as individuals or businesses.
You're right. I mean, I agree with that. Where I'm focused on is that we sometimes think that the players who need to capture that are like startups, and that can be, right? Or like specialist MGAs and so on. But I think that if many years ago, while I was working in Asia, we wrote a paper on bank assurance in China together with BCG. That was while I was at Swiss Re, and you can still find it online. And the market that we used as a comparison case where it's done really well was actually Spain, I think a market that you know very well. And already 10, 15 years ago, this was a very sophisticated way of doing bank assurance there. And not just in life and health, also in P&C, actually. Not as sophisticated as life and health, but already quite there. Now, do you think the reason why some of those powerful bank assurance distributors have not taken care of every niche is because they don't know the niche exists, or because they had bigger fish to fry until now? So therefore, I think the ones to capture the next piece of business might as well be those who actually captured a few pieces beforehand and just now move on to, let's say, more niche-y areas that can be quite profitable though, and that they now have finally time for. And maybe where also the technology wasn't as readily available as it is today. For example, for areas where the individual underwriting is a bit too costly if you have a human do that, but where an AI-driven agent might get you there 80-20, and therefore the niche was maybe too risky to just do it blindly in inverted commas, but now there's an opportunity. So therefore, I think there's plenty of potential and a lot of people who can capture this potential.
Eric, you just connected with the second point on technology trends that we were going to be touching on, which is AI and automation, specifically when it comes to insurance distribution. Which use cases or which processes would you see that will be mostly affected by the advancements of AI in the short term? And do you have like any specific angle on where AI currently is not being as used as it could be?
Currently, the application of AI and automation, well, these are not the same things, right? So automation has been out there forever, right? In the simplest form of insurance companies who decide not to do something. If you say no, by definition, you have automated the business because it's just not happening, right? Or if you say yes by default, you've automated it as well. So I think the edge cases have existed for a long time. And now we've seen machine learning or other forms of automation already in reasonably standardized cases, right? So you can actually, you see a lot of automation and AI driven things in claims or in customer service, chatbots and so on. Sometimes the question when you speak with people and they very honestly compare the cost of a chatbot minute with an agent is actually not so far away from each other, right? Because certain very simple tasks and questions can be answered very simply. Like, for example, a standard motor claim. This is only a few minutes by an agent, right? They do this very, very quickly. So anyway, the point is it has this secondary effect actually of making the human work better. So, but this has been happening for a long time now, is increasing, and it becomes more and more table stakes. Where you see fewer applications when you speak with people is in the field of underwriting, not because it's completely impossible, but also simply because it's a slightly trickier piece where you have more moving pieces, right? You have uncertainty in more degrees of freedom. And also you're actually binding the company to risk, which normally is not the first thing you let the machine do, right? So, but there are actually, of course, players who move into this, but less so. Where I see very little is, and I'm not saying this because I'm aware that there are solutions, but in terms of sales, what often happens is that AI-driven tools are there to basically save time. So for example, you have an AI-driven agent that helps you write emails more quickly. You say, please say no to this request, and then the thing will write a nice email. And that saves time. And then you apply that time to do more business. But then that do more business part, in my experience, is it so easy to measure that and credible? Maybe it is actually, but I don't think it has become so common that there's a, let's say, a convention where people say, look, this actually is helpful. I put credibility behind that. I think it's still a little bit belief space involved in this. I think everyone knows that where the direction is going. It's just let's say the ultimate proof case that this is not 5% certain has not made yet. So therefore, probably the stakes there are the highest, because if your cost ratio is 5% on average, or 6 for reinsurer and 20-25% for prime insurance company, the maximum you can get from efficiency gains is that, right? If you halve that, you've made half that money. In sales, of course, the sky is the limit. You can grow 1,000%, no problem. And that can be either by being more efficient or by applying what you've got into a new product, and so on. There it becomes more and more difficult because for new products, you need new data. We all know that this is then probably the crowning moment where the AI actually helps you grow your business, not just by being more efficient, but actually by suggesting new fields of business. But also there, I've seen solutions that are actually going in that direction. So I guess, I don't know, maybe I sound too optimistic and positive there, but it's obvious that all of this is going to be done, right? And the question is simply, are you a first mover or are you a follower? I mean, if you do nothing, it's certainly not going to work.
And to that point, technology, of course, comes to solve a problem. So if technology is able to solve that problem better, faster, or more cheap than how it's currently being done, it will succeed. Let's talk about the pain of when it comes to buying insurance. Let's talk about either individuals or businesses. We understand that sometimes it's still frustrating, although you have a broker, although you do it online, etc., to buy insurance. It's a product that you hardly ever fully understand, that you don't understand what to compare. What would you say are kind of the main problems in how currently distribution is being done that AI could help with? Let's talk about the pain before getting into the technology.
So when you look at that from not the customer perspective, but from the company's perspective, it becomes an issue of hit ratio, right? Do you actually waste a lot of time quoting for the wrong business, or simply your hit ratio lingers at 15, 20% when you know if it were 20, 25, 30%, you could actually make money, because these tend to be non-linear things, your fixed costs and so on. And so there's been a lot of work that went into that direction, starting with the old machine learning days where this was tried with, let's say, limited success, I would say, other than the most sort of standardized business, but for commercial lines, for example, tricky. Now with new AI supported methods, I think one big breakthrough was the better ability to match risk appetite in a better way into the equation. So therefore you can match on a more granular basis your risk appetite to the marginal contribution of that new piece of business, which is not a trivial thing, especially for larger like reinsurer or commercial line, where you have aggregation problems and accumulation and this and that. But I think from a customer perspective, it's the same thing. You know, if your hit ratio is low as the seller or as the company, the customer will get sort of approached with stuff that they actually don't want or need or never going to buy, because they're always going to buy it from somebody else for whatever reason. To me, that is friction on both ends. So the price for solving it is actually higher than just solving it for the customer. Everyone will be happier. How to do that better? Sometimes it's maybe a slight tweak to the product. Sometimes it can be an addition to the pricing, like a slightly more dynamic pricing, that all of that can be automated. But the problem is it will probably require, I don't know the technical term for that, but if you set hypotheses and then try to prove them or disprove them, it can be tricky, because I'm not sure we all know exactly what question to ask. I mean, some of these, the reason that these hit ratios are as low as they are is also because there's a lot of moving parts in that system. It has a little bit of a black box feature. And I think with the technology available today, you can probably make educated guesses that are not data mining, right? But educated guesses that allow you to widen the hypothesis testing of old into an area where it's a little bit more trial and errorish, and where you can maybe make smaller advances without having like super scientific approaches to that, which is just not what businesses usually do. Now, obviously, the issue sometimes being GDPR and the data regulation on this. But I think what also shouldn't be forgotten is that a lot of these insurance companies who do this, they have strong brand names. And with a strong brand, actually, sometimes customers would actually like to try out things because they trust the brand and think, well, we haven't figured it out completely, but why not try? So to me, I think these are a little bit the directions where the friction can be reduced through the now available tools.
Awesome. And to round up the conversation, and I think you pinpointed this a couple of times, which is, of course, when we're talking about innovation or applying AI to a new process, like to fully automate the sales piece, or when talking about embedded insurance to drive new products through embedded channels, we naturally attach these to a startup. We naturally say, hey, the startups will be the one that will be innovating, and the innovation process for an incumbent is, well, to eventually purchase or copy that startup, right? Do you agree with this, that innovation comes from startups, Or will we be seeing in the insurance landscape more innovation coming from the incumbents?
I think what I've learned now over the last few years concretely, right? I mean, how do you make friction go away? People buy more because they want to, they get better offers, companies sell more, there's more matching. Sometimes I feel it's actually down to very simple information, right? Ask a question. So in a previous role, we had a case where we're selling like online bike insurance, and literally, you know what the most common question was, and like 20% of the people asked the question. They just ask, okay, is this insured, after they bought the insurance? You're like, you'd think, right, that people read it beforehand what they buy, but no, people ask that question afterwards. Now, if you don't have a chatbot that can answer this very quickly, you have a lot of phone calls that you need to answer, and basically you get punished immediately for having sold something. So I find nowadays when you talk to a chatbot, they can actually solve your problems, like at Amazon or wherever, right? You have an issue that can't be taken care of automatically. You ask that thing, and very often they can actually solve your problem, including remittance of payments and all that. I think this stuff has gotten really good, like the communication aspect. That I deal more with established companies privately, of course, right? So therefore, I feel they're actually getting this quite right. So maybe they use the startup to come up with that, but they're definitely doing the right thing there. So in terms of who's winning the innovation here, I think a lot of this comes down to capital as well. This is a capital intensive industry, the insurance industry. If you have the money to do things, you can do a lot of things right, especially since we've had a few pretty good years in insurance now. So if you look at some of the markets that tend to invest in solutions heavily, you see how they do that, right? They use some of the excess profits to basically invest heavily into tech, some of it to clean up like legacy systems and whatever, but also quite a lot of things to invest into the future. So that is an advantage for the established players because the cash flow will buy you a lot of things, right? You can actually have a startup help you do things. For the startups on the innovation, this is the only way you can survive. If you offer a Me Too product, it's unlikely you can do it cheaper and better. Or at least that you can finance the growth, because even if you do so, you will grow so quickly that you need so much capital to finance that growth that you probably actually again need somebody to give you that capital. Private equity and VC is probably too expensive capital for that, and so on and so forth. And therefore you're a little bit in that trap. When it comes to product development and so on, is this the biggest strength of established insurance companies? Maybe not. You know, they're sometimes very slow in bringing out new products, and it's not because they don't know or they don't want to. Often the distribution at established companies learns much more quickly than a startup what they actually could sell more of. But then, of course, if you have so many brilliant products that are selling so well, of course, you develop a little bit of an in-force logic, and therefore you might actually want a startup to help you with building that product, like a product factory, white labeling, and so on. The issue with that is then sometimes that when it goes full circle and goes back to the company, you still need to integrate into the IT and whatever. And it becomes tricky actually for the same reason that it was tricky in-house. Also not easy, but doable. So I guess go back to an earlier point I made. I'm not sure it actually requires either or, because I also feel that a lot of people who end up at startups, and I joined 2 startups in a row, basically, not at the first stage of my career, but afterwards. It's often also that it's sometimes a bit difficult to explain why you're doing this because it's not 100% rational. You do things at startups where you think, why actually am I taking that pain? Everything is difficult, nothing goes straight. Everything is hard work. But there's actually some people who like that. Also when they're at Incumbents, right? There's actually people at those big companies who are exactly like that as well. So maybe it's just a bit of a different vehicle for people. And the days when I often get asked that question, what do you like better, the big incumbent or the startup? Can you do either? Now that if you're a startup, could you ever go back? And I'm like, why not? I mean, it's crazy. I mean, it's not like I spent 20 years in hell before I joined the startup, right? The grass is never greener. It's just different, right, on either sides. So I feel a lot has happened already. And now with the startups becoming so sophisticated, right, in their ways, there's a bit of an ecosystem and marketplace establishing. Products and innovation almost gets traded a little bit. Of course, it's not easy. It's always difficult to get paid for things and this and that. But if you compare that with the olden days, I mean, it's paradise nowadays, right? You can talk to people. It's everyone does it third generation. It's not like you have to explain things like it's traveling to Mars. I think it's actually right now it's a great time. It's not the Wild West time anymore. It's also not the going concern. It's the part in the middle where everything is possible. And to me, I find this is a great time to be in the insurance industry for that reason.
That's amazing. With optimism, and of course, I mean, with all the work that you've been doing lately in Alpine, I think this optimism, it's also very important because challenging times are always there. When you were mentioning like why people like in startups are pushing like a very hard rock when they know it's hard and when they know it's very difficult, is like probably the same mentality on why people run marathons or so. Like it's a hard challenge, but in the end, if you eventually arrive to your destination, you felt the relief of doing something very, very important, not only for yourself, but also for a community, your customers, employees, investors, etc. So yeah, thanks for these insights, Eric. I'd like to finalize the conversation with a small question. You're in Switzerland right now, I think specifically in Zurich. For this audience, there will be European mostly. Would you like to share what's like a hidden gem in Switzerland that you would recommend everybody going to, like for a vacation or for a weekend?
Okay, so I can't say low taxes, right? It's not a location. And it's not that well hidden anyway. Okay, so man, I mean, there's a lot of beautiful parts of Switzerland. If you like the outdoors and if you've not seen the Engadine Mountains, the Engadine is where St. Moritz is, but that is more like the sort of, if you're loaded with money, then maybe that's the place to go. But close to St. Moritz, there's a lot of other places. If you spend some time there in winter or also in summer, the first time I was there, I remember that I was looking at things and it was almost like too kitschy. It was like, you know, for real now? And I know a lot of people in Switzerland also don't like it when everything is seen like, oh, this little perfect this and that. But with the Engadine Mountains, it's not like that. It's more like you're stunned by overwhelmed by the beauty of nature.
That's amazing. I'll write it down in the bucket list. Great. Thanks a lot, Eric, for this conversation. Thanks for providing all these insights. We've been through covering a lot of different topics, and thanks for sharing your insights on this.
Well, thank you, Martin, for inviting me, and great to speak with you as always. And let's keep pushing. I think we're on the right path, aren't we?
Optimistic future of insurance. Thanks a lot.
Thank you. See you.